Investors bought just over 90,000 homes in the third quarter of 2021, which is a staggering new record. It is much higher than the previous record of 82,000 homes, which was set just one quarter earlier. And if you're like me, you might be a little bit surprised by this news because generally speaking, investors want to find a great deal. They want to pay as little as possible, ideally under market rates. And with property prices where they are right now, good deals can be pretty hard to come by. The question is, what is going on here? Why is investor activity in the housing market picking up steam when prices are already at all-time highs? In today's video, we're going to break down what investors are seeing in the current housing market, what types of properties they're buying, and what you should do about it. What's going on, everyone? This is Dave Meyer from Bigger Pockets, and I hope you had a wonderful Thanksgiving with great food and great company. Now, this video is actually premiering the day after Thanksgiving, which is one of my favorite days of the year because it is the only day you can make the Thanksgiving leftover sandwich, which is one of my all-time favorite sandwiches. And if you know anything about me or you follow my Instagram account, The Data Deli, you know I am a little bit sandwich obsessed. Now, if you want to make your own, just throw some turkey, some stuffing, some mashed potatoes, gravy, whatever you got. You can put cranberry sauce or a whole pumpkin pie on there if you want. Whatever you got, throw it on some bread. You won't regret it and you'll thank me later. Now, I know that was totally off topic. I thank you for indulging me. So let's get back to the important news about the explosion of investor activity in the housing market that we saw in the third quarter. What are investors buying? Where are they buying? And what happens next? We're going to get into that right now. To start, let's look at this crazy graph from Redfin. And I should mention and thank Redfin for making all of this data publicly available. We're going to be looking mostly at their data today. So let's look at how dramatically investor activity has taken off in 2021. The last two quarters are significantly higher than anything we've seen before, at least back to the year 2000. And while Redfin has done an excellent job crunching this data, it doesn't break down what type of investors are accounting for this activity. And as you probably know, there are a lot of different types of investors. Is it small and medium-sized landlords? Is it hedge funds or big private equity firms or iBuyers? We just don't really know based on the data available. Well, we do know a little bit, actually. We know that iBuyer activity, despite all of the news about it, just makes up a relatively small portion of the total activity. But frankly, I wish we knew a little bit more. I am going to keep hunting down this data to see what percentage of activity is from institutional investors or small investors. And hopefully I'll find it. When I do, I'll let you know. But for now, what we do know is that investors are buying a lot and they are buying increasingly single family homes. We actually see, according to this data from Redfin, that townhomes and multifamily purchases remained relatively flat, while single family homes rose as a share of investor purchases at the expense of condos. Personally, I'm not really surprised here. I think you can make good money from condos. I'm sure people do it all the time. But I personally think single family residents are better investments, especially recently. Here are a few reasons why. First, since the pandemic began, people have favored larger homes with outdoor space and extra room, and I think this makes sense to everyone. The second reason is that HOA fees that are typically associated with a condo can drain cash flow. And the third is with a condo, you don't have as many exit options. This can lessen demand for your property when you go to sell it. So maybe other investors agree with me, and that's why investors are tending to buy more single-family homes than condos. The other thing Redfin has uncovered is that investors are moving away from low-priced properties and increasingly into mid- and high-priced properties. And I'm a little confused by this, to be honest. I'm not entirely sure what to make of this, but I have a few hypotheses that I'll share. The first is that demand is up for second homes and vacation homes, and these tend to be higher priced homes. So perhaps investors could be targeting fancy houses in vacation destinations, either on speculation that it's going to go up even more or for use as a short-term rental. The second hypothesis I have is that wealthy Americans are leaving cities like San Francisco and New York and all these expensive markets for smaller markets. And investors could be targeting the higher priced homes in these second markets because they think they're going to appeal to a large number of Americans migrating to new cities. But those are just my two hypotheses. So if you have thoughts, I would love to hear them in the comments below. The last thing to note before we go on to what all this means and why this is happening is that this is not happening equally everywhere. For example, in Atlanta, 32% of all homes were purchased by investors. The average is 18, just as a note, but 32% in Atlanta, which is up 160% from last year. But meanwhile, in Chicago, only 7% of homes were purchased by investors. So if you're wondering about your own market, make sure to check out the full data set, which we'll link to in the description below. Okay, so that is what Redfin has found to be going on right now. But the question remains, why is investor activity surging when the market is so hot? To me, there are four things triggering this behavior from investors. First, as I mentioned a few weeks ago, the market is getting less competitive. There are a few ways to measure this, and all of them are pointing to a less competitive market, but just barely, just slightly. So don't get too excited. The encouraging news is that the number of homes that were off the market within 2 weeks has dropped from 55.5% to 53% over the last 3 months. And the number of price drops have gone up from 8.5% to 11% since May. So although these aren't really earth-shattering numbers, nothing has really fundamentally changed. We're in a very strong seller's market. I think this is part of the reason investors are getting more active right now. Investors tend to perform better in a less competitive buyer's market, and things are getting better, at least a little bit. So perhaps investors are able to find better deals and aren't faced with as many bidding wars. The second thing is interest rate speculation. If you watched my video last week, you know that I, as well as everyone else in the entire world, believes that interest rates will start to rise next year. And this is sending demand for housing even higher than it's been the past few months. Normally, home sales and demand see a seasonal decline heading into the fourth quarter, but that's just not happening this year. Instead, home sales actually went up 4.3% from September to October to hit a seasonally adjusted annualized rate of 6.85 million, which the last time we saw that was in February 2006. Not exactly a great time in the housing market, but I don't think that's going to happen again. Just wanted to call that out. That increase in home sales is not just fueled by investors. It is both investors and homeowners, but the point remains the same. People want to lock in these extremely low rates while they still can. And they should. If you haven't refinanced, or if you're investing for a long time horizon, as you should be, then locking in a low rate is logical. So go do that now. The third driver is soaring rents. Rent has risen over 10% year over year. It's one of the fastest increases in rent we have ever seen. And many investors see this trend continuing into the future. So people are buying even at high prices because they believe cash flow is going to improve in coming years and make for a great investment over the long term. And the last driver, number 4, is the long-term prospects of the housing market. Now, if you watch me, you know I've said it a million times, and I'll say it one more time right now. There are not enough houses in the United States, and people always want houses. The long-term appreciation prospects of the US housing market remain very strong. Could we see a blip in the coming years? Of course, the market will go down at some point. But for investors looking at long-term returns, that just doesn't matter because long-term cash flow and property values are very likely to grow. All right, so to wrap up things today, investors are all in on the housing market right now. There is less competition, there is urgency due to future interest rate increases, and the long-term growth prospect for rents and property values are increasing investor activity. To me, the big question is what happens in the middle of next year or to the end of next year when interest rates start to rise. Will demand remain strong among home buyers and investors, or will we see a softening of the housing market? Only time will tell, but let me know what you think is going to happen in the comments below. For Bigger Pockets, I am Dave Meyer. Thank you all so much for joining me today. Go make yourself a leftover sandwich, and I will see you all next week.